Imagine living in a world where two of the largest and most influential economies find themselves on a collision course. In this scenario, the United States and China, nations recognized as economic superpowers, engage in warfare. While the political, military, and humanitarian consequences of such a conflict are immediately concerning, the economic fallout would be transformative and potentially catastrophic. Let's explore what this conflict could mean for the global economy and our everyday lives. On the surface, the direct impact on the economies of China and the United States would be immediate and severe. Both countries would face immense fiscal strains as their resources are diverted towards military funding. Key industries in both nations, from technology and manufacturing to finance, would experience disruptions. The intricate supply chains linking these two economies, which have been developed over decades, would be disrupted almost overnight. This disruption would lead to shortages of goods and spikes in prices, affecting businesses and consumers worldwide. Moving beyond these immediate effects, the global economy would experience unprecedented shockwaves. Given that China and the US combined account for over 40% of global GDP, their conflict would trigger a worldwide recession. International trade, which heavily depends on the stability of these economic giants, would falter. Countries reliant on exporting raw materials or goods to either nation would find their industries crippled, leading to widespread unemployment and social unrest. Financial markets would not be spared. Stock exchanges around the world would respond in turmoil, with share prices plummeting as fear grips investors. The confidence so crucial to market stability would be shattered, leading to a rush towards safe haven assets like gold and government bonds. Even the status of the US dollar, long seen as a global reserve currency, could be threatened depending on the war's progression. This destabilization could affect everything from international debt obligations to global trade agreements. Further complicating matters, the conflict would accelerate the decoupling of the global economy into separate spheres of influence, a trend already observed over recent years. Countries would be forced to choose sides, aligning with either the US-led bloc or a China-centric economic order. Strategic alliances would shift, with nations reassessing their economic dependencies. The previously interconnected global trade and financial systems would fragment, leading to decreased global cooperation and efficiency. Technology development would also suffer. Both the US and China are leaders in technology and innovation, and their conflict would halt collaborations and likely result in a split technological ecosystem. Standards, regulations, and technological advances may diverge, slowing down global progress. The competitive race for supremacy in areas such as artificial intelligence, quantum computing, and green technology could lose pace, affecting global responses to challenges like climate change. On a micro level, individuals and businesses would feel the impact as well. Consumers would find daily life altered by shortages of tech products, clothing, and even food as supply chains fail. Prices would rise, impacting household budgets. Businesses dependent on global trade would need to navigate new trade barriers and regulations, leading to consolidation or closures. In conclusion, a hypothetical war between China and the US would reshape the global economy, triggering consequences that reach into every household and marketplace. The massive disruptions would foster a fragmented, less cooperative world economy, with reduced growth and increased uncertainty. As improbable as such a conflict might seem, contemplating its economic impact underscores the importance of sustaining diplomatic relations and maintaining peace between these superpowers. Only by collaborating can they ensure stability, which the global economy so crucially depends on.